Welcome to part 2 of my video series, which answers the question posed by Todd, who owns an IT consulting business in Central Indiana. Todd writes, I'm buying out my business partner and I want to know how to go about determining a value for their ownership, and when I do buy them out, can I write it off on my taxes as a business deduction? Well, Todd, I hope you caught my first video where I discussed the valuation process of your business, and now I have answers for you in this second video about the tax implications. Be sure to watch them both.
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
The process of buying out a business partner can be very complex, and this two-part video series looks at the basics of buying out a business partner and the resulting tax repercussions. Part 1 of my series looks at the valuation of a business and the type of professionals who provide this type of service. In this video, I'm talking about the tax implications of such a transaction, and I'm also answering the question with the assumption that Todd is a partner in a partnership, not a corporation, and he has two partners, so that the buyout of one partner does not automatically end the existence of the partnership. As you know, there's never a black and white yes or no answer in the world of taxes. There are many exceptions, so you'll want to seek the advice from a tax professional about your specific situation. In order to discuss the taxation of this transaction, I have to first explain what a partner capital account is. When Todd and his two partners started their business, they each put $10,000, let's say, into a business operating account. At this point, both Todd and his partners have capital account balances of $10,000 each. Now let's say that in the first year of business, the partnership profited $60,000, so each of their capital accounts are now increased by $20,000. The new valuation of each of their capital accounts is $30,000. If each partner agrees to withdraw $20,000 out of the business as a distribution of profits, their capital accounts would now equal $10,000. Now let's say that one of Todd's partners is ready to retire and he withdraws his remaining $10,000 and nothing more. If that's the case, then there's no additional tax to pay for the retiring partner, and no deductions are taken by the partnership for this distribution, and neither of the remaining partners' capital accounts are affected. However, in this case, the retiring partner wants to be bought out at a price that exceeds his capital account and instead is based on the value of the partnership. So based on this information and in a very simplified explanation, the remaining partners would personally buy out the third partner, and the capital accounts of the purchasing partners are then increased by the amount they each came up with. The taxation of the buyout mostly affects the partner being bought out on their personal income tax return, and the partnership simply increases the capital accounts of the remaining partners. So the resulting answer is no in this case. When Todd and his remaining partner buy out the retiring partner, the business will not deduct the cost of the buyout as a business deduction. Even if the remaining partners have to borrow money to buy out their retiring partner, any interest incurred will be deducted on their personal income taxes on Schedule E, page 2 of their 1040, which will offset their share of the partnership profits or losses. And as a side note, Todd, based on the structure of this buyout, it could be beneficial to create a new partnership for you and your remaining partner, because this move could create goodwill, which is amortizable over 15 years and would reduce taxable income in the new partnership. I hope this was helpful, and I thank you for your questions. If you have a tax question, please submit it to Tina at ACTservices-inc.com, and I'll make it the topic of a future show. For more information on this and other tax topics, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.